Hello, I'm Ninness, your loan pro from Denver, Colorado, with another installment of How Much Mortgage Can I Afford? Today I'm going to be diving into loan servicing. Who services your loan, why people use the phrase, why was my mortgage sold or it was sold again, and how that could impact you on your specific loan. As always, if you enjoy the information, please like, subscribe, and follow. Keep getting this information delivered to you every week. Otherwise, thanks for joining me on another episode of How Much Mortgage Can I Afford? Well, thanks again for joining me on another installment of How Much Mortgage Can I Afford? As I said at the intro there, we're going to talk about servicing today and why that's important for your loan. The reality is that when you get a mortgage, you have to make a payment to someone, and that's called the servicing company. Now, often what you'll hear people say is my loan was sold again, my loan was sold again, and that's probably not accurate. The reality is that usually there is only one backer or investor on a mortgage. Now, for a direct lender like myself here at New American Funding, we sell our loans directly to Fannie Mae, Freddie Mac, Ginnie Mae. Those are your big agencies, we call them, and they handle your conventional FHA and VA loans. Now, when it comes time for servicing, though, we retain the servicing rights, which means we're the ones actually collecting your payments. I have a payment center in Plano, Texas, and they receive all the payments coming in and actually get that noted into the system. They're also the ones who handle things like changes on your insurance, handling hail claims or fire claims, where you get a check for the damages from your insurance company. 9 times out of 10, it's made to both you and your mortgage company, and you need to send it into the servicing center to be signed and returned, and that's just to make sure that the building is getting repaired correctly. Now, why is that important for you on a home buyer decision? The reality is there are two reasons. One is knowing who is going to service a loan will give you a much better idea of what you can expect for payment options. What I mean by that is there are plenty of servicing companies that only accept a paper check mailed in. That's not very convenient if you are someone who likes to do online bill pay. They also have poor customer service. You can look up a lot of reviews on servicing companies and find out that, frankly, you could be dealing with a company that is very unreputable. Okay? Now, for myself, because we keep with those servicing internally, that gives you the ability to contact me, and I can help you with the servicing issues you may be having and walk you through the customer service process. That's a benefit to working with a company. So the second question is why would I benefit from choosing to, rather have the lender choose who the servicing is? And the reality is because banks or lenders generally make profit on who they sell the servicing rights to. And the ones who give the most money typically have the worst options for you, the consumer. So what you may be finding is that the terms you're selecting or the terms you're receiving on your purchase seem better than what other markets have, but that's because in the end you're going to have a servicing company who isn't offering you full features on making those payments. Things like, for example, online bill pay, auto bill pay, ACH if you will, or even switching over to a biweekly payment schedule, which reduces how long that mortgage is in place, saves you quite a bit of interest over the term of the loan. Those are all options that we have at my company because, again, we retain that servicing. Now, the other thing that goes into it is that you might be dealing with a company that says, we can't do this, we can't do that. They're telling you no on getting your loan, and it's not because you can't get a loan, it's actually because who they are going to sell that loan to won't allow that. What we call those is overlays. Basically, most companies do not have their own money they are lending. They are lending it from outside sources. And you could actually get it from banks like Wells Fargo, Chase, Fifth Third. There's a bunch of banks that are lenders on a wholesale level. They actually have their own requirements on approving loans. And if you don't follow their guidelines, they won't purchase that loan. Why that's important is because I've had clients who have been relocating to Colorado and they don't start their job for a week after they have wanted to close on their home to move their family out there. And a lot of banks are saying, nope, you got to be on the job before you do that. Well, the reality is that is their rule. If you get into the actual conventional FHA or VA guidelines, it's perfectly allowed. You just have to find the lender who can offer those terms. And generally, that's going to be a direct lender like myself who retains those servicing rights. So when you're out interviewing for who is going to provide you with your home financing, ask who is going to service my loan. Now, if you don't care about sending in a paper check, if you don't care about customer service on that part for after you close on your loan, it may not be a big deal. But if those elements are important to you, you want to ask your loan officer, who is going to service my loan, and can you tell me with certainty that they're going to? Because a lot of times they would tell you, well, it's one of 10 folks. Hopefully that clears up a little bit more on what servicing is, why it's important for you to ask those questions, and although it may not change drastically how you qualify, it's definitely going to make sure that you have a better experience in the long term with your new home. Thanks for watching this episode of How Much Mortgage Can I Afford? Again, like, subscribe, or follow if you want to see more episodes just like this one, and we'll catch you on the next installment.